With rising home prices and high interest rates, you probably feel like it's impossible to get into the market as a first-time home buyer. But here's the thing, the old way of buying a home is outdated. And in 2025, there are new strategies to help you get into your first home without breaking the bank. So whether you're stressing about saving for a down payment, or you're unsure if you make enough to buy your first home, this video is for you. So first, let's talk about the traditional ways of buying a home, which worked in the past, but isn't realistic anymore. So let's say you want to purchase a $600,000 home. We're going to start with that purchase price, and the old way of thinking was 20% down, conventional. So our interest rate at this level is going to be at a 6.99 as of today, putting our monthly mortgage payment, including taxes and insurance, at $39.27 per month. This method assumed you had years to save up for a down payment, a high credit score, and one stable income. But in 2025, home prices are higher, saving takes longer, and interest rates can fluctuate. So here are the strategies that actually work for first-time home buyers in today's market. So strategy number one, we're going to look at doing a 5% down conventional loan. $600,000 purchase with just 5% down. We're looking at a conventional loan. The interest rate is actually going to be less at 6.875%, but there is something called MI, also known as PMI, and that factor is going to be at 0.44. So it's very important to know this so you know what I call your effective interest rate. And your effective rate is the true amount of interest you're paying if you include that PMI. This is going to get our monthly payment a little bit higher because of the higher loan amount and the higher effective interest rate, but a lot less money down. So now we're at $46.90 a month, which is about $500 more than where we were at before. So this allows you to purchase the home a lot sooner with that higher monthly payment and start growing your nest egg of equity sooner. Strategy number two, FHA financing. So we're gonna look at doing even less down payment at just 3.5% down, $600,000 purchase price, and the interest rate is going to be lower. So we're looking at a rate of only 6.125. But we're putting less than 20% down. So we're going to have MI, or in this case, something known as MIP. That's what FHA calls it. Same thing as PMI. This factor at 3.5% down is almost always going to be a 0.55% factor. So our effective interest rate is actually going to be 6.675%. This is going to make our monthly payment, including the taxes and insurance, at $45.81 a month. You'll notice right away that this is actually, with less money down, it is a lower monthly payment than the conventional option. Strategy number three, this is going to be for my self-employed borrowers, folks that don't want to pay a lot of taxes and they write off everything on their tax returns. So strategy number three is going to require 10% down, but it will allow you to continue to write off everything on your taxes, and you'll just have a higher interest rate. This is something known as a 12-month bank statement loan. So we're going to use the last 12 months of your bank statement deposits, and 80% to 90% of those deposits will be your income. It is at a 9% interest rate, so a little bit higher, but there is no MI, no mortgage insurance. This is going to get your total monthly payment at that same $600,000 level at $50.82 per month, all in principal, interest, taxes, and insurance. So this one is a fantastic option for those who are okay with a little bit higher of a payment in order to continue to pay next to nothing to the IRS. And what I haven't mentioned in this video is that I've already helped multiple home buyers implement these same exact strategies, such as, for the sake of privacy, we'll call him John Doe. He was able to use the same 3.5% down FHA financing. He got the money down for his down payment, and the seller paid for all of his closing costs. So all he had to come in with was the 3.5% down, and he is now a new homeowner. Or even my other client, we'll call her Jane Doe, and she used the same exact bank statement loan. She had no income to show and no conventional or FHA loan was going to work. So our strategy with her is she did the 10% down. She is a homeowner with that new property, and she's going to redo her taxes one of these years to show more income, and then we'll refinance her into a normal conventional loan. So if you are looking to buy your first home in 2025 and want to figure out how much home you can afford, you can click the link in the description to book a mortgage consultation with me. And if you're just looking for more free home buyer and mortgage-based content, make sure you're subscribed here to my channel. I have some exciting stuff planned for you guys. Real Mortgage Mentor, signing off.